Trading the foreign exchange market carries high risk and may not be suitable for all investors trading on margin. Utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Here we go. Good morning. This is Thursday, January 7th. And trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in the foreign exchange, you should carefully consider your investment objective, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investments, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is the live trading room. It is for educational purposes only. No financial advice or recommendations will be provided. Any trade taken during this live session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money that you cannot afford to lose. And before trading live, always operate with a written trade plan that identifies the rules for entries, exits, targets, and risk management. And with that, we'll start going to the charts. Keep in mind that we have not received, or I have not received any IRIS alerts since December 22nd. I'm not sure the software is up and running. We're in discussion with the company, finding out, and right now it sounds like the developer hasn't updated the information, so I'm not sure we're going to be getting any more alerts or not. But having said that, we do have some means of what we're going to be doing. And we're going to be looking at the Arrow trading platform that we're using now with Auvoria Prime. It is a manual trading system, and it gives alerts a lot like what the IRIS did. Only this is given alerts in the zones. Let me go and share my screen, and we'll discuss this a little bit in a little bit more detail. Let me change my screen here. And this is it right here. Okay, so this is the Arrow alert system. And what it does is it identifies supply and demand zones. You can see by the red area is the red area, solid area is the supply zones. The green areas are the demand zones. It will pop up alerts like you see over here. And these alerts come frequently throughout the day. On the foreign exchange pairs, we use a 15-minute chart. There is some techniques to use higher timeframes for more of a swing trading. But for this, for my demonstration purposes, I'll be using a 15-minute chart, and we'll be looking for the trade alerts. Now, right now, there's an alert that came in. This was quite a little while ago on the U.S. The equity that does trade. This does alert for equities and as well as gold. I use mostly the British pairs and the Euro pairs and a couple of the US, and then I have gold and I use the S&P 500 index. Whatever you have, whatever foreign exchange pairs that you're looking at using, it will alert those pairs. Whatever you have up here is what it will be looking for the patterns to generate the alert. Basically, what it does is that there is a gray shaded area right in the middle of the chart. You can see this indicates where the London session opens and where the at noontime on the U.S. session. That's the primary time. That's the most active time and the best time to take trades of these different pairs. Whenever you get an arrow is what indicates when to take the trade. So basically what it does, it goes up, it hits a supply zone, it bounces off of it, gives you an arrow, and then the arrow says to go short. Now with the S&P, we're on a 5-minute chart. The S&P and the gold are the only two that I use a 5-minute chart. The others I use 15-minute charts. But when you get the arrow, when the arrow is generated on the close of the bar that the arrow is over top of, or below in this case, either case. So like in this case, the arrow generated with this bar closed at the open of this candle is where you would take the trade. The question would be is not all trades are tradable. And just because it generates an arrow does not necessarily mean you should take the trade. The criteria that I use and the first strategy is that if you get the arrow and you measure the distance from where the entry of the trade would be, you go 20 pips on the S&P. In this case, you're looking for a 5 pip target. So if this thing goes up 5 pips before it hits a red zone, that's a tradable trade. And you use a $5 target and use the $10 stop. It's usually pretty much 2 to 1. That may sound a little backwards, but that's the ratio that seems to work the best to give you the highest win performance ratio. The other thing is you look and see if, as you scroll into the chart, and you look and see, do you have more green zones than you do red zones? If you just hit on this little minus button up here on the MT4 platform, and you'll see that it scrolls in, and you'll see that this thing is in an uptrend. You have a lot more green than you do red on top. So you want to take the trades in the direction of where the strongest trend is. In this case, if you got a down arrow, you may want to think about, rethink about taking it short, but you still have, because you would be looking at, you're in an uptrend, this would be a pullback. This way you have a lot of green on the bottom, you have just a couple bars of red on the top, and you get the arrow. So it basically came down, it bounced off of the demand zone, gave you an arrow, and then you have, this is your next area where you can probably expect to bounce. If it shows where it's weak, it's a good chance it may penetrate through it and use this one as the next target. So this would be a tradable trade with this one. I would be willing to take this trade. Now, I'm not going to take it now because this thing came out a few hours ago, and I'm not going to take it on that. But this would be a tradable trade. This one would be not quite as profitable, or not. The fact you're in a uptrend and this is a pullback, you would probably not want to take this trade. Or this one over here where the red arrow is down. Now this one, you're in a strong uptrend, you see the arrow, and you see you had the room to be able to take it to the upper target. And so that's what we're looking at with this one. So this one I'm going to pass on because it's past the time. But I would be looking to see if it pulls back to where this arrow is. And if it generates an arrow and it doesn't hit your target and comes back and forms another red zone, then you want to exit that trade. In other words, if there's a red zone that develops right as this thing's spacing right in here, then you would want to exit that trade if you took this one long and you didn't hit your target. And sometimes if you just go up and I go from this area to where it actually got the high of where this went up to, if you got in right at the open, so that'd be right about on the open of this candle, and it came up this side, it still gave you, this is still up to about $3.60 on this trade, on this pair. And that would have been, you wouldn't be hitting your target. And right now you're still in the trade. There's still no reason to get out because you're still expecting it to pull back and come back and hit your target. And you can see this actually starting to show a little bit of a flag pattern. You have a strong move up. And this is where the wedges that we've been talking about over the last several years or the last several weeks and months is that even with this charting system, with this alert system, you can actually see, as if you've been with us, you've been seeing where you can see a wedge right in this area. And so if I draw a trend line, you could actually draw a trend line from, let's say, this area here to here. And you could draw a trend line from the bottom of this arrow to here. There's your wedge. And so right now you're still inside the wedge. You have a strong move up. And so there's really, again, there's no reason to get out of this trade. If it were to break this bottom trend line and give you a red zone, you would probably want to exit that trade. And then you just have a small stop. Rather than taking the full $10 stop, you could be mitigating your stop by just a few pips. But right now, you're still showing that it's still in an uptrend, and you'll still be looking for this for the target area. And let's see, what else can we have? One thing that's important to know, and we haven't talked about this a whole lot, we're going to talk a little bit about position sizing while we're waiting for another alert to come in here. And we'll see if we can get some live alerts this morning. But one thing we're looking at is trying to spend a little bit of time today on position sizing. And some of you may or may not have our position calculator. Let me see if I can find it here. And here is can everybody see I don't have my compadres here today. If let me know if you can see a Excel spreadsheet. Could someone raise your hand? Eva? Oh, there's Eva. Eva just came in the room. Let me see if I can get her into the panelist here. Panelist. And hey, good morning, Eva.
Morning. Sorry, it wouldn't launch for me. I had to really get in the room.
Oh, I was wondering why I was here all by myself this morning. You're always here on time, and usually before I'm ready to go.
I've been sitting here since 20 to 8.
Oh my goodness! You had trouble getting launched? Why'd you have trouble getting launched?
I don't know. Normally it just launches and throws me in the room, and then you see me and bring me over, but it didn't. And I thought, where's Al? So I thought I better manually try to get in again. And there you were talking.
Well, good. Well, I'm glad you showed up. Can you see my spreadsheet?
Yes, I can.
Okay, because I was having problems last night where I was moving charts over to my share window and it wasn't showing anything. I was wondering if something's going on with my platform. But anyway, we're getting back into the swing of things here a little bit. And this is the calculator that we use for trying to position size. Now, let's just use an example. Let's say you're on like a Euro New Zealand. Let's say you get an alert. Like over here, we had an alert this morning, earlier this morning for the Euro New Zealand. So I come over here to the Euro New Zealand chart and pull the chart up. And let's see that alert was a buy. That was right on 11:30. I'm going to assume that it was this alert right here. This would be one that I would not have taken. If you look and see, if we scroll, just using this as an example, I'm going to scroll into the chart. And you see there's a lot of red up here. And we had an alert to buy. Well, the buy alert was right over here, and you had a red zone right above it. You can see where it's traveling. It's trading in a rather narrow range. And so I don't think you would probably have enough room off of this candle, off this red alert. You'd be right up into the zone. You wouldn't want to take that because you'd have to break through this whole supply zone in order to get even your 20 pips or even a few pips. So I would have to pass on that one. But if let's say you were looking at a Euro New Zealand pair, you'll come over here to the chart and see where the Euro New Zealand is. And you can see that this pair is only worth $5.93 a pip. So what you would do is you put $5.93 in the Euro New Zealand, you put that into this pip value. And that shows you what your pip value is. And like I was saying, that we were using a 40 pip stop. So, and your stop is really your profit regulator. It tells you how much you're willing to risk versus how much your reward is. Now let's just say you have let's just use a $1,000 account. And you want to risk 2% on this trade. That would mean that you would be risking $20. 2% of 1,000 is $20. So you'd be risking, with a 40 pip stop, you'd be risking $20. In order to risk $20 with this pip value, you could take a 0.08 lot size. And that way, if you got stopped out with 40 pips, you'd lose $20. If you're going for a 20 pip target, you'd only make 10, which means you actually only get 1% because you're referencing your profit off of how many pips you're looking to get. If you go for a 40 pip stop and a 40 pip target, then if you hit your target with 40 pips, you would be getting $20 on this $1,000 account. And the same token of, let's say you're looking at the Euro US pair, let's say you had an alert for the Euro US, that's $10 a pip. So if you increase that pip value to $10 and you're still using the 40 pip stop, 2% risk, you're still only risking $10 because that's still 2% of your account. But now you can see that with a higher pip value, your lot size now, instead of being a 0.08, you'd only be able to take a 0.05 lot size to maintain that risk reward ratio. And what I like to do with on this is the fact we're getting as many good alerts and good results for this. If I went to risk 3% on this account, now you can see that my risk would be 3%, which would be on 40 pips would be $30, and I'd be back up to a 0.08 lot size. But with a 3% risk, if you're going for a 20 pip target, you're only going to get half of that because your risk is twice as much as your take profit. So you'd basically be looking at a 1.5% profit off of this $1,000 account. And let's see if there's, I think I had I don't have the other spreadsheet on this one. Let's see here. Let me see if I can blow this up a second. And then let's look a little bit about, let me see if I have it over here. Let me see if I have it. So that's the calculator to try and decide what your lot size is. Now, if you look and see what how this thing can grow for you, or let's say you have a $1,000 account and you're going to, even if let's say you get one, you could be able to get 1% a day. Say you take one trade a day and you're able to get 20 pips out of that trade. And so this would be 0.01, that's 1%. And if you multiply this by plus this times this, that would mean you have $10. And let's say you come, and so if you add those together, you see you have your $10, your 1,000, oops. Let me delete that. Where's my delete button? I get back to being back on my laptop, my desktop again. So if you had a $1,000 account and you made $10 on that 1%, your now account is $110 or $1,010. And so you go and you add that over here, and then you go 1%, and you keep doing 1% a day. Unless you do that all the way down here for, well, let's say about 20 days. And we make that 1% a day for 20 days. That $1,000 account let's see that. And then we go this over here, copy. You can see how this will, even though it doesn't look like a lot at the beginning, we look at $10, $10.10, $10.20. But eventually, as you get down here, after, let's go on. Let's see, we go 1. Let me just do it this way, just do it the old-fashioned way. 2, 3. These are bigger digits here. There we go. That's what I was trying to do. So after 21 days, your $1,000 account would not be $1,200. So even though it doesn't seem like a lot, as long as you can stay consistent, if you can just get one good trade a day with 20 pips, you can see how that account would grow. And after this point in time, you'd be up 20% on your account. So that's why patience and discipline goes a long way when it comes to position sizing and trading. I don't know if that makes sense to everybody. And right now we see we did get a British US alert. So let's go take a look at that one. I said these things come off pretty frequently. So here's our British US. And again, we're looking at it. Here's the up arrow. Here's where it is. But we can't take this trade because even though we're in the money, this is the money zone. Even though we're in the best time of the day to be trading, if I look and see that basically we have 3 green zones down below, you have 3 red zones below, it's actually trading inside of a range. However, you're right up against a supply zone. you would not want to take this trade because you don't have 20 pips to get, even though it may break through it, right now you wouldn't want to take that trade. So you would pass on that trade as well. And that's the analysis. Is that simple and that fast? You say, okay, look at it and see. Now the fact that you have like 3 zones here and 3 zones down here, and you get this alert, this would be pretty iffy. I don't know if we could get enough room to get 20 pips out of this arrow right here. I don't think we would. It'd be probably close. Here's where the arrow was. Here's where you'd be entering to try to enter the trade, and you would have 16 pips to the zone. You probably wouldn't want to take that trade. There's just not enough room for your risk reward. You have plenty of room to the upside, but before you be hitting this zone, I like seeing it get at least a little bit into the zone before for my 40 pip stop. But I definitely want to have more than just 15 pips to the downside. And you can see where it came down, bounced right off of that zone. Came up, retested it, bounced again. Still didn't get your 21 pips, your 20 pips. And now it gave you an up arrow. Now it's going to be right up into this zone. Again, you wouldn't want to take that because you're right up into the, so you would just pass on that trade. Let's see, what else can we talk about here? And let's see. The other tool that we use is the our RCS tool, which some of you are familiar with. Now, Eva, let me know if you see this chart. Do you see this chart now? Or
no, I'm still seeing. Oh, yeah, I do now. Yeah.
you see the RCS tool?
I see the RCS, yeah.
Oh, yeah, last night it wasn't doing it for me. I don't know why that was. Okay, this is our RCS tool. So what we're looking at doing, since we're not getting any alerts with the IRIS, we can look and see if we can find something that may be tradable on our own. This is our RCS tool. Basically what it does is showing all 8 major currency pairs on 4 different time frames. I've got this one on the 1-hour chart. This is the 30-minute chart. Over here is the 15-minute chart, and up here is the 5-minute. And if I can see where, like right here, I'm looking at all 4 charts, and I see that the British pound is at the top of 3 of them, and it's just coming down a little bit off the 5-minute, but that's nothing too much to worry about. But you can see that if we ever be trading the British pound against any other currency, you'd be wanting to be trading it to the strength of the British pound. That last trade that that last one we were looking at, this was the British US dollar. And so this is another way you can help to determine whether or not you would want to be taking this trade. You can see that on the 1-hour chart, the British and the British pound, the US dollar are neck and neck to being the strongest on the 1-hour, on the 30-minute. Now you have a nice little spread here on the 15-minute where the pound is much stronger than the dollar. So you would still be wanting to trade this to the strength of the pound, but you probably would want to pass because on your 30-minute, they're not that far apart. They're both fighting for first place and them being the strongest. With this chart over here, if you're looking at it with the British pound being the first currency of the pair, you'd be looking at the strength of the pound. Now that would give you some reason to think that this may go up to being a good trade, but again, you're right into the zone. If this arrow were down here, I would not hesitate to take that with the British pound being stronger than the US dollar. And that would give it, but we didn't get the alert down here. So again, that's another reason to pass on it, even though the pound may be stronger and it may go through this. I would just wait for the next alert to come through. Do we have any questions about any of this? Yes.
Now, I have a question from Leslie. Yesterday, I was mentioning about how I'm going to be doing the 14-day trial with Arrow. So Leslie is asking where she can find this. So I told her it's in the back office, but if we have a moment, can we actually show her?
Yeah, let's see if we can where the 30-day trial is.
Yeah, just so she can access it.
Yeah, let me
the 14-day trial for $30.
Yeah, let me pull that up. Let's just do that right now since we're still kind of waiting on. Let me move this out of the way. Actually, let me change screens here. Let me pull it up and see if I can find it.
I just figured it's easier to show.
Yeah, it is. Thank you for doing that. Thank you for bringing that to my attention here. So we're going to go to main 3. And let's pull up my Auvoria Prime. Let's see. Um, let's see, which way do I want to do this? See if the dashboard shows up on the dashboard, or maybe the marketplace.
It's in the marketplace, I believe. Yeah.
If you go into the marketplace, this is my subscription. Let's see.
Yeah, you have to click on the marketplace over on this left-hand side and
Yeah,
drop down.
That's where I'm at. In fact,
This looks like your dashboard.
I'll tell you what, let me do this. Let me do something a little bit different here.
Or is it under shop and orders, maybe?
That may be it. That sounds right. Shop
Yeah.
and order. Let's try that. Shop and
Okay,
orders.
yeah.
Shop.
Oh, there you go. 14.
Oh, yeah, there was. It was right there.
Okay.
Let me back up here a second. Okay, we went to shop and orders.
And orders. And then there's
14-day access pass link. Oh, that's for the pass link. Oh, yeah, that may be it.
which is the same thing. Is it not for the 14?
Yeah, there you go. You go to this page, $30
Yeah.
for 2 weeks. You click on add it to the cart. Let's see, I don't. Well, basically, I don't want to do it because I'm not sure. I don't want to be charged.
Yeah, no, as long as she can find where it
Yeah,
is.
but this is where you start. You just add it to the cart, and that'll give you your 14-day free trial or your 14-day trial period for this.
But I would just advise you, Leslie, don't do it till the weekend. So you can start the week off fresh with it. Like, don't do it now because you only have 14 days with it. So wait until this week is done and get yourself set up possibly on Saturday or Friday after market close.
Yeah, there you go. Now, Leslie, do you have any of the other soft? You have the IRIS or the AIRIS? IRIS, is that correct?
I think it's IRIS, yeah.
Yeah, which is like that. We haven't had any alerts. I think I'm not sure what's going on with the IRIS.
Okay,
I would say
got
if
IRIS and variable.
you have IRIS. Okay, you have IRIS and variable.
Yeah.
Okay.
Which is the same as what I'm using. Actually, I
Well-
just stopped my IRIS, to be quite honest with you. It came up for renewal and I did not renew for the month because we weren't getting alerts.
Yeah,
So,
I don't know if now you'd probably still need, if you wanted to run variable and another one, you need the 2 licenses. But yeah, with the 30, if you have the 30-day free trial, I would be curious to see if I don't know if that 30-day free trial is going to work for her.
it should, because that's what I'm doing. Because
Oh,
I don't have
you are? You're
licenses.
doing,
So
okay.
yeah, so I want to try the Arrow, but
Okay,
I don't
so-
want to stop my variable because I only have the bronze package. I'm not paying for 2 licenses. I only have
Got
the
it.
one. So I'm going to do this 14-day for $30 just to try out the Arrow.
Okay.
Yeah, okay. See, there you go. Leslie's saying that she was thinking the same, but thought she would lose access to this room. But no, because we're going to be teaching Arrow as well, Leslie. So
Yeah, I think you'll be good. If for some reason you do lose access to the room, let us know. Email me at Hawkeye@AuvoriaPrime.com and let us know, because that we don't want you to not be able to get access to this room. And as far as I know, if you're the way I'm understanding it is that if you're part of Auvoria Prime, you should be able to get access to this room, I believe. At least for now, anyway. In fact, we even had somebody last night that wasn't even Auvoria Prime that got in there somehow. I'm not sure how they did that, but you should not lose access to the room. If you do, be sure to reach out, let somebody know, and we'll make sure that you get back in here again.
yeah, but try the 14-day pass, and I just want to try it out, and it looks really good. And all of the videos that I listened to of Nathan's over like a couple of days ago sounded really, really good. So, and watching Al work on it and everything, I'm thinking, it's going to be very profitable, but I do want to try it, and I don't want to pay the the second license fee. So this is the best way to do it for us.
Yeah.
So
And at least this way, if you're in the stream, you'll get a lot of good coaching on this thing. And actually, I see there's some alerts right now. There's a British cat alert that came in. I just looking at it right now. I'm seeing that it's right up here by the red zone. Not going to take the trade.
okay, you'll show us your
Oh,
chart after you've
yeah,
taken the trade.
I got to switch. Got to switch screens again here. Hang on, let me see it.
Thanks, Al, for showing Leslie that.
Oh, absolutely. Let's try it. Now you should see my arrow screen. Oh, how about now?
Yes, now we do.
Okay,
Thank
good. We had actually we had several alerts right here. We had 4 alerts all at the same time. The euro yen, the British CAD. We have 2 showing 2 of these. I'm sure why showing 2. It's the same alert here. But let's so that we're looking at the British CAD, and I can just quickly look at this. I'm in the money zone. That's good. I'm in an up arrow, but the up arrow closed right here. I don't see where I have 20 pips to the upside on this one. So with this, I've only got 3 pips. I'm going to pass on this trade. Go to the next one, euro yen. So I'll come over here to the euro yen. And this one looks more promising. So here it is. Here's the alert. And here's, do I have 20 pips? I've only got 11 pips to that side, to the, let's see, 22. It got in here at 27.11. Say 27.12 was where the alert came in. So 27.12. So at 27.12, 32. If I can get up here at 27.32, that's only 10 pips. Again, I'm going to pass on this trade. I think they can find these markets can be relatively tight. I think waiting on what's going to happen with the U.S. elections. I think that's still a problem. And so those are 2 trades. I'm just going to pass them both on. There's enough trades and alerts to come through the day. You don't have to take marginal trades. And if we're in a really tight trading zone for Thursday, this is really a pretty tight zone for a Thursday. We're only looking at between. See, this is at 27.22, and this is at 26.98. This whole zone is only 22 pips wide, so it's trading inside a 20 pip region. So, to me, that's for this alerting system. It's really not tradable. We can go through some of these other pairs, like we can look at the British Aussie. Again, here's the arrow, no trade. Come over to British CAD, we just looked at that. Here's a British Swiss. Now, here we had an alert. Spread this out a little bit. We have more red than green on the top. Let's scroll in and see if there's anything more to be looking at. Let's scroll in. We have, it seems to me it's range bound. It's going sideways. You have, this is the range that it's been going in, but it's been going sideways up until just now. It broke out up here. Here's an arrow. This one might be tradable, but it's already past the alert time. Although just because it's past the alert, if the alert's still valid, it's not that, it still could be a possibility here.
Yeah, there's still quite a bit of room between the next zone.
Hi, Matt.
Hi, good morning.
Morning.
I didn't know if anybody was going to show up with me today.
Yeah.
Did you have problems getting in the room today?
I had problems overnight getting to sleep. So that's a me problem.
Okay, here's the zone. This is where this alert was. You have 34 pips to the upside, so that would be tradable. You've got it pulled back. How far did it pull back? It pulled back 27 pips. Your stop would have been all the way down here at 40 pips. So that's so far. If you're taking it right at that alert, you'd still be good. And you can see that right now, where the price is right now. It's only 2 pips to the off of where the original alert was. And we could probably draw a little bit of a wedge and see if there's anything with that. but right now it's making a higher high. Here's a high, here's a higher low, higher high, here's a pullback. We're still looking right at this area. This could still possibly be tradable, even though we didn't take it right when we had the alert. We did already had the pullback, and now it's a question of whether or not it's going to, whether you'd want to take it. There is room to the upside. We don't have any other zones developing. So right now it's still kind of going sideways. I think this is a tradable trade.
I like it, Al, because you have a very strong green zone at the bottom.
And we already looked earlier that the British pound is the strongest currency of on different time frames. So I'm going to take this as a buy. And so I take it as a buy. I'm going to set my stop, set my target. So I'm just going to right click on the trade. I look to see where I got in. I got in at 2010. That's just almost a little bit better than where the original one was, 2012. And so then I'm going to modify it. And I'm going to use 400 as a 40 pip stop, 200 as a 20 pip target. I'm just going to click on the stop box, click on the target box. It all, once you click on it, it puts it right down into the bottom, and you click on the blue, and there's just, and you're done. Now you're waiting for the trade. And you can see where on more MT4, what you do is this is where you entered. This was the entry here. This is the 20 pip target. Here's my 40 pip stop. Now you could possibly go and take it to all the way up to the red zone. I'm just going to go for 20 pips. If I start seeing again a lot of strength, I may want to move it, but right now I'm okay with just leaving it right there at the 20 pips and see if it takes a trade and if it wins. With the British Swiss, bring our calculator over here. The British Swiss is $10.28 per pip. So if we go with $10.28, and now I've got a $4,000 account here. So if I might really have, I could take a whole lot bigger position on this. But let's say with a $4,800 account, with my 40 pip stop, with my $10.28 value for the British Swiss, and I'm risking 3%, I'd be risking $144, but I could take a 0.35 lot size with 2%. I'm taking a 0.2 lot size, and that's pretty much what I'm taking. So I'm still back here with the 2%. So I'm risking $96 on this pair with a 40 pip stop. If I get my 20 pip target, I'll make 45, we'll make almost $50 on this. And the lot size would have been, actually, I have a little bit, I could have taken a little bit bigger position. I could have taken that into a 0.23 with a 2% risk. But that tells me that so now I'm well within my position, my position parameters, and we'll see what happens. And that's all you have to do to when you get these alerts. See, do you have room to the top? Do you have room to the bottom for your stop? It's below your moving average. Moving average is pointing in the up direction. That's a good sign. You have several arrows. You had an arrow here, which would have worked out. You have another arrow here. This is the one we're taking right now. This is the second arrow, and see if it can work its way up to the supply zone.
Now, Al, can I just point out for those that are the attendees that the developer does recommend that you only use a 0.01 position size per $100 in your account. So just keep that in mind. So if you have a $1,000 account, your position size for your trade, it should be only 0.10.
0.10. Let's see how that works out with our calculator here. So in this, okay, so this is pretty close to the $10. So if you have $1,000,
There you go.
and you're looking at 40 pip risk, 2% target, he said a 0.01 per thousand.
Per 0.01 per 100.
Per 100.
So he's even higher than the two.
So that'd be a point. So yeah, he probably has almost to a 4%.
He's got a 4% risk.
He has a 4% risk. Okay. So in this particular case, that means I could have been taking at 4,800. I could be taking probably a 0.4. I could be taking twice the size of what I did.
So you're being more conservative, which
I'm being more conservative. Yeah.
there's never anything wrong with that.
He said, I never heard that figure from him.
Yeah,
I did. Yeah,
no,
I heard it. I just believe that's a little bit more risk than I'm comfortable with. I think I would push it as far as 3%. Anything more than that.
Yeah, we were discussing this last night. We all kind of like the 3% risk on this.
Yeah. Sorry.
Yeah.
Joking.
Oh, don't choke.
No.
Mute yourself if you're choking. No, I'm
No,
kidding.
no.
I'm just
I
kidding.
did. But yeah, I would stick around the 3% mark. I don't know. I wouldn't feel comfortable going any higher than 3% risk in one trade.
Yeah.
Because you can be in multiple trades at once, right?
Yeah, exactly. And then you start running into margin levels and things like that, margin levels and leverage levels and things like that. It starts becoming a factor for you.
One of the things that happens here is because we're taking these bigger swings, you can be in a trade for a couple hours. It's not going to be as fast as AIRIS. So sometimes it is, sometimes it's not. And you got to be ready to be able to swallow that.
Yeah, so you all have to determine your own taste for risk. I was just stating what he actually said himself in his video.
Yeah, I must have missed that in the video.
Yeah, no,
Sorry?
he's mentioned that a couple times in some of the other calls that we've had. So
Either it's because he has a lot of faith in this system, or it's just he's so experienced. You know, so he's willing to take a 4%.
well, he knows the math behind it, right?
Yeah.
And if you know your win ratio, you know your knowledge of system performance, you know, like you only get that through many trades. Like right now, I'm looking to make 100 trades on the system before I start pushing the live account, because I want to understand exactly what I'm getting myself into. 110%. I don't want there to be any question about my win ratio or whatnot. Because you know, the point is to figure out what not to do. And when you have a system that's so concrete and set in stone and so simple as bags, it just accelerates the learning curve. It just makes it a lot smaller because there's a lot less subjective analysis in here.
I was looking at drawing this thing out on a regular chart, and it looks like it's I mean, it's still, everything seems like, even though we can see we're actually in a little bit of a pullback right now, but it's still nothing to really worry about. It's still in an uptrend. It's still way above this, even if it came back down and retested our this moving average. I would call it a moving average because I don't know what it is, but we'll call it a moving average. Even if it comes down and retests that, your stop is still way below that. So, I mean, you're giving it lots of wiggle room in an upward trend. That way you sort of circumvent a lot of those real strong moves that don't always, that whips you out, but that's the way it keeps you in. You're going for a small profit. I said, there would be no reason, if you're able to sit and watch this, you could put your stop all the way, your target all the way up here to where I have this yellow line, and you'd be perfectly fine to do that. If you have time to watch it, know where that's 20 pips are. So that way, if it gets up there and starts to struggle, you may want to rethink about that. But even where this price is on the target, it's at 120.26. And for those of you who have the Fibonacci tools and things like that, you can see that that's right at where the a Fibonacci bounce point will be, pretty close to that. So the thing is, don't get greedy. Go for your 20 pips and move on to the next trade. There's going to be a lot of, this thing shows lots of trades. Now, what I don't understand is why is that show two of the same trades next to each other. I don't know why that is. Did yours do that, Matt, or is that just me?
Matt just stepped away for a moment. His
Oh.
did that yesterday too, but he had two of the same charts pulled on. Two of the same, like it's the same pair, but two charts.
Oh, I wonder if I
So
do.
that's why his showed that way, he was
Yeah.
saying. So I don't know, because you don't have,
I don't,
True.
although I do have it on another computer. I have it running on another computer, I think, which might be part of the reason why that is.
could be, that's a, hey, there you go, that could be. Because you can see even below, you don't have two of the pound US, but you do have two of the pound Aussie as well.
Yeah.
You see that a little bit further down.
And let me, for everybody in the room, anybody in the room, if anybody in the room does not know how to get these alerts on your cell phone, raise your hand and I'll go through that little drill.
Well, I know I don't, but I don't even have it yet.
Okay. Well, here, let me go ahead and just
Doesn't
go
hurt
through.
to show us,
I'll
yeah.
just go through. I'll go through the drill here. Basically, on MT4, we'll talk a little bit more about MT4. I mean, we've been using TradingView, and I'm still using TradingView, and I still look at my TradingView charts. If there's any decision about whether or not to take the trades, I'll look at my TradingView charts to see some other factors that we've been going through over the last several months to help give confirmation to the trade. Most of the time, it's pretty cut and dry. Do I have 20 pips? If I do, am I in the right direction? If I am I in the three things? Am I in the money zone? Yes, I am. Am I in an uptrend? I have an up arrow. Am I in an uptrend? I scroll this up, tighten it up and see, am I in an uptrend? And I see that I've got two zones on the top. I've got two zones on the bottom. I'm pretty much in a sideways trend, but I've got lots of room to where the next area is. So that would be okay. Do I have 20 pips? Yes, I do. I'll take the trade. Sometimes it's not quite as cut and dry, and you can use some of your other trading techniques to make those determinations. But to make sure that you're getting the alerts. With MT4, you go over here to the toolbar where it says Tools. You click on the Tools and you'll see where it has an Options tab. Click on the Options tab. And in the Options tab, you'll have several choices. Here's one that says Notifications. And so you click on the Notifications, and then you check the top box that says Enable Push Notifications, and uncheck. I don't know if it makes a difference to check the bottom one or not. I just get the top one checked. And then on your cell phone, where you have your MetaTrader 4 app on your cell phone. You click on the app, you click on the settings of the app. I can't show you because I don't have a way of showing that. But on the settings, you'll see, when you click on settings, you'll see about halfway down the list, you'll see where it says chat and messages. Click on the chat and messages. And then at the very bottom of your cell phone on that page, you'll see a MetaQuote ID. Then there's a number that goes by that. Click on, type that number in the box, click on the test button, and your phone should ding. And that's all there is to it. Click OK, and you're all set. And that way, when you get when these notifications come through, it comes right up on your cell phone as a notification saying, "Hey, we've got an alert here," and go take a look at it.
Just gonna restart my computer. It's even worse than it was yesterday. So give me a little bit and I'll be right back.
Okay.
Well, let me ask you a question. On this pair that you have up, you've got the pound franc.
Yeah.
Now, not the top arrow, but the one directly to the left of it, just below.
This one here?
So yeah, so you get the alert there, and
Right.
then you enter on the following candle close. Is that correct?
This candle, right? Well,
Yes.
you enter on where the arrow is. You just go up to see where it closed. Move
Mhm.
over one candle and enter the trade.
Oh, at the open. Okay.
Yeah.
Gotcha.
Yeah. When that arrow is generated, you open that arrow is generated on the close of this candle, and that means you open it. You take it on the open of the next candle.
Okay, so you can take it like pretty much immediately.
You take it pretty much, and a lot of times you'll see. It's not unusual to see. I mean, like here, you'll see where it went up a little bit, it pulled back, still well within our. Didn't take our stop, didn't hardly even challenge our stop at all, because and it came out of, this thing was generated as it came out of this zone.
Mm-hmm.
And it came right back in the zone. I'm a little surprised that this zone is still here, quite frankly, because it penetrated right through the zone. So, but yeah, you would take it, it came down, it hit, it was in the zone, came up, hit that zone, created another, let's see, where is this screen zone created from? Well, actually, this zone may not have been here. This one may have been created where this thing came through and retested it.
Could be, yeah.
Wait, no, I don't. I take that back. I think that's right, because I think this zone was all the way over. I think it was generated all the way over to the left here. Let me just see if I can scroll over here.
Maybe if you put like a higher time frame, it'll show it easier.
Well, it'll change the higher time. It'll redraw the zones with a different time frames, I believe.
Oh, okay.
Yes, it does. It changes the zones. They won't be the same.
Yeah, you can see that it just went away.
Okay.
But as you see that zone now, there is no zone right here. Now, if I go back to my 15-minute chart, I'm just trying to figure out where that zone started. Here's my 15-minute chart. Let's move it over
So
some.
you're back to December.
Yeah,
That's
I need to
okay.
get it back.
There you are.
It was generated way over here is where it was generated, and it hasn't. It's interesting that this thing's probably drawn a little bit differently than the way the OTA zones were, I think. And
Yeah, but that's a pretty strong zone, though. That
it
green
is a
zone
pretty,
there.
yeah, it is a pretty strong zone. But if the zone's all the way over here, it had a bounce. Why would it be?
It looks like it was in the beginning of January, because at the end of December, it wasn't there yet.
Let me see if I can find a way to find out where that is. Let me move this thing out of the
I
way.
don't know if you can slide it over that much, my friend.
Yeah, I don't know either. I'm trying to see if I can.
I tried to do that with MetaTrader 4, and I think it's one of the limitations.
Oh, there it is.
There it is.
So this zone was created off of, this move up. This is where this zone was created. But I'm surprised that this didn't take it out. Unless it just redrew it again and use this as a reference. I don't know. I'm not sure how the algorithm works. And we're not going to know how that works. All we know is that it works.
Yeah.
Mm-hmm.
Do not ask, wonder why, just
Don't
But
take
yeah.
apart the washing machine. Just
yeah,
use-
don't take apart the washing machine. Speaking of that, we're getting a new one. We ordered one back in August. And
I remember.
they just called the other day and said, hey, we have it for you. We can deliver
Oh, wow.
it. So,
What, you've been beating your laundry with a rock down by the brook? or
well,
what?
we knew the other one was on its last leg, and we were trying to be proactive, and never did in my world where I've expected it was taking 5 months to get a washing machine.
That's unreal. That's a long time.
Yeah, it is.
Holy smokes. There's a lot of things we take for granted in life, isn't there?
Yeah. Well, this COVID thing has cut production for a lot of businesses, and that's why
Morning,
it's taken so.
Christine.
That's why it took so long.
Christine's in the house.
Oh, okay.
Hi, Christine.
Let's go ahead and
Good morning.
let's go. We'll move her. Well, we have to move her over here. There she is. I wonder if she had problems getting in the room this morning. Right now, you still see this trade still. I mean, we hardly took any heat at all on it. Well, we're taking a little bit of heat, I guess, $33 worth right now. But on a almost $5,000 account, that's nothing to be too concerned about. They're taking 2/10 of a contract, and it's still well, actually, it's taking a little. There's something you have to get used to with this, is that as long as the candles are above this line right here, they're going to be green. Even if it's a red, what we normally know as a red candle, it's still going to be showing green. Like right now, this thing's on a pullback, so this would actually be a red candle. But as long as it's in the uptrend, as long as the candles are green, just stay in the trade. If the candles start turning red and you start getting a zone, then you want to be thinking about getting out of the trade and exiting it with a small loss. That's another factor, though, to be aware of with this arrow. Right now, we're not concerned. We still have a little bit of an upward trend off this trend line. And if we get a bounce, we had a near bounce here. We had maybe get another bounce here.
Al, Leslie is asking, what is the meaning behind the weak, the word weak on the green horizontal?
Yeah, that's a good question, Leslie. The weak is basically saying that it's not a very strong zone. If you see like down here where it says retest equals 12, what this thing is saying is that this zone here has been tested 12 times. The higher, the more it's been tested, the stronger the zone is. If it's weak, that means it probably hasn't been tested. Oh, it looks like it just went through that, didn't it? It's not even there anymore.
Where that other that zone up there?
Well, apparently there was, now that says week, this week wasn't here. Was this week here before?
I don't-
Where's this week? Usually the week
remember.
is affiliated with the zone, but I don't see the zone there right now. So does that mean that this was?
I
this-
could see something interesting. You see that big green zone that we had down there? Well, that's not a weak zone, you know. It's been in there 1, 2, 3, 4, 5, 6, 7 multiple times. So I don't think that's the zone it is.
I don't
right?
think that, yeah, I think what I'm wondering is if there wasn't a zone here at one time and then the label didn't go away. Usually if you see weak, usually there's a zone. The only time, this is the first time I've seen weak without having a zone by it. Here's
Down
one
there
down
as
there.
well.
And there's another one. Let's look at another pair, just see here.
Zoom out. Okay.
There's this week again. Huh, I wonder what's going on here. I'll have to ask Nathan about that.
Yeah.
Usually I've always
Sounds normal.
it. I've always seen it with like here, this is what I've usually seen. Like here's a zone that say it's a weak zone. It's only been it's probably just been generated, but it hasn't really been tested. This one's a weak zone, so this one probably, let's see if we can see over here. Let me just take this off here. It's only been tested. This thing was only generated off of this move off of here, and it hasn't really been tested yet. This one was generated off of this down move and it hasn't been tested yet. And we'll see. British
It's
US.
good to know though that, you know, that he's got that there, that it's a weak zone.
Yeah, a lot of times if you see it bouncing up against a weak zone, a lot of times I don't know if he takes those trades or not. Not sure.
I don't think so, because I think if he's in a trade and then a red zone appears or there's a red zone that close, he won't take it.
Right. I think
With strategy 1. Now there's other strategies, right? There's multiple ways to trade this thing.
Right now he's got about 6 strategies that he's published in the products list of when you go through how to use the product. He has about 6 different strategies that he goes over, and we'll go over those as we become more familiar with the software ourselves. We'll go into the other strategies as we move forward. Right now, we're just trying to keep everything consistent with everybody that's going to be coaching this thing with just strategy 1, just to get everybody used to using the most proven and most simple way of trading this thing. Again, we had an arrow here. We have a zone right below it. It's pointing right down into the zone. Don't take that trade. Now, if we get an up arrow, we have 1, 2, 3, 4, 5, 6, 5 green zones. We have 1 red zone. Now, if we get an up, if it bounces off of this green zone, we'll get an up arrow. I'll jump, and we won't get the up arrow till it crosses over this line with a green bar. Then we would get an up arrow. So if we get a strong move up that can penetrate through this zone, get rid of this, wipe the zone out, and give us an up arrow with a green bar, then we can take that trade, and then this would be our target up here. Let's see if we have the distance here. Yep, it's in an uptrend, more green than red. So now we're looking for an up arrow on this one. And when we get it, we'll have an alert, and then we'll look and take the trade. Any other questions? We'll just keep waiting for the trades and see. We've talked about the pip calculator as what size lot sizes to use. Now, do you have anything to add to this?
Meaning me?
Not at the moment. Not at the moment.
So one about these live trading rooms, if there's nothing to trade, you're just trying to find out what we can talk about here to without getting into too much detail on some things. It's very easy to complicate the system. This one is very easy. There's nothing to complicate. It's either there or it's not. And we'll just have to figure out how we're going to fill the time up with these sessions while we have slow alert days.
I'm just trying to open up my system again, and I think I'm good.
And so I'll just sort of scroll through some of these and just
So you see, like this one here, you're not going to want to buy, right? You're going to want to sell.
Right.
So if you had that arrow going down, that's a strong, strong sell. So look for
Yeah.
an arrow to come down.
Like here, you have all this red up top.
Right.
We have one little green down. It's in a downtrend. We had a nice zone pull back. We had an up arrow going green into that. It bounced, came back. It bounced off of it, gave us a down arrow with a strong downtrend. You take that trade. This one you would take. The uptrend, the up arrow you would not take. That's almost like this one right here. If this thing comes up, bounces, and gives us a down arrow, we'll be all over that one.
Even before you cross the MA?
Well, you won't get the arrow when you get the arrow.
Mm-hmm.
You wouldn't take it until you get the arrow, and you won't get the arrow until it goes below the whatever this is, a moving average, we'll call it. But here's you have the up arrow right into the zones on the downtrend. Don't take that trade. It's of a low probability. Moving to like the British CAD.
Let me see something here.
Here again, we have an up arrow coming right up into the zone. We have two red zones, one green zone. If it comes up here and bounces and gives me a down arrow, I'll be on that trade. Like here, it came up, it bounced, down arrow, red above, one below. Here's a down arrow. Now this one you probably wouldn't have taken because you're right close to the green zone. Assuming that the green zone was still there, I would not have taken this trade, even though it looks like it probably worked out. We measured this one out. $20 pips would be right about. This would be 20 pips right here. And you see if you had 20 pip target, and this candle right here would have just barely maybe gotten it in, but that's gone pretty deep into this zone. This zone's been retested 6 times.
We got to remember also that a zone is only potential support and resistance, right? It doesn't matter how many times it retests. Eventually, it's going to break through.
Yeah, that's
It's never going to say, oh yeah, 100% of the time it's going to bounce in that red zone. It's just a higher probability that's going to bounce there.
Yeah. And every time it bounces, usually what happens is it goes a little bit deeper into the zone each time. It goes a little bit deeper, a little bit deeper. But there's a lot of buy orders in here. There's a lot of sell orders up here. But eventually all those buy orders are going to go away. If the move gets strong enough to the downside, all those buy orders are going to go away and it's going to create some new zones below it. Now this is, let me see how this looks. Like here is a green arrow, come up. That was only 10 pips, but now pulled all the way back. It's still above. Now, if you're in this trade, you wouldn't want to take that. As this thing's pulling back, if it's still showing green bars, if you had a nice pullback, you may want to, well, what you do is you get in with it, on it, and let me just see here where this one is. Draw a line. So here is where the entry was on this candle. It opened up right here. This is the entry, and that would be at 72.94, and it pulled back all the way to here. That's at 72.76. So 76 and 20 would be 96. So at 96, actually the 20 pip target for this move here would be at 94. So it'd be 94.0414. 73.14. This is where the target would be, but you've got to get all the way through this zone in order to get to that target. So again, you wouldn't want to. Now, if you looked at that and you saw, as you looked later on, you saw, wow, this has a pullback, had a bounce. I still wouldn't take this trade because it just isn't room from the arrow. Now, if you were able to pull back, and if you were to say, well, I'm going to pull back, and if it bounces off of here, as we've often learned, where it bounces off of major trend lines, that would give you the 20 pips to the upside. And as long as this thing stays green, then you probably could maybe get a little bit better entry than what the arrow gave. A lot of times you'll see these pullbacks off the arrow, and that's nothing unusual. And sometimes what it does, it allows you to get just a little bit better entry off that arrow. But I wouldn't, unless I knew I could get 20 pips to this point right here, and I'd probably use this wick right on this part. I'd be using that wick and say, okay, if this thing gave me the arrow and it pulled back enough to where I could get the 20 pips, then I might be willing to take that trade. And you can see it's actually starting to draw a little bit of a wedge in here. It's a little bit of a flat bottom. A little bit of a trend going up this way. And if you did take this trade, which you should not have taken the trade because you don't have the room. But this is 94, so the stop would have to be all the way down here at 44. 72.44 would be where the stop would be. Somewhere right around there. So you have a nice little uptrend. You have another little channel going up to the upside. They used to join off the MT4. Here's your channel. It's in an upward channel, and the target would have to be all the way up in this area. Wouldn't be a bad trade, but it's still one I would not take. Any other questions?
No thanks.
And saying there's still no, I just double check my IRIS and just make sure there aren't any IRIS alerts. I don't think there are. I didn't get any on my phone.
Right, okay, yeah.
And let's see, let's go on to there's a fish again right up by the zone. This way we talked about with being weak. That's it still has a down arrow, no up arrow yet. It's nothing there. Had the up arrow here, but we wouldn't take it right now because we're looking for a new. It's already out of the chute. We wouldn't want to be taking that. 20 pips was already pretty much. Here's where that's where you have taken it. 20 pips is, we're right at the 20 pip target area zone right now, right in this area. Be interesting to see if it gets all the way up here to this would be a 40 pip move. Be a 40 pip stop, 40 pip target if you were to go 1-to-1 on that one. If you did take this trade, you have taken a little bit of a heat on the pullback, but everything's still good. You have gotten your 20 pips by now. And it would be your choice if you want to go up to see if it comes up to retest this next zone up here. Again, it's kind of up into the zone, not taking that one. Now here's something that looks like it could start. Now you have all this red on the top. You have only one green bar, so you've got a lot of downward pressure. You did get the up arrow. This is one that, again, I wouldn't have taken this one, but this one may have actually worked out okay because it's really penetrating through this zone here. Strong move up. Euro New Zealand, let's see where that is. Euro is strong on several time frames. This one would have worked out okay, looks like. Yep, you've gotten your 20 pips. But again, you were coming right up into your supply zone. It looks like it's going to plow right through this one. Strong move on the New Zealand. Steve Vitterall was recommending not to trade the New Zealand pairs this week because of volatility. They are rather volatile. That could work against you as well as for you. Here was the trade. Here's the arrow. Nice little, you had lots of room. You have green on the bottom, one on the top, one red on the top. You're in an uptrend. You came down, got the bounce, got the green arrow, across the trend line. You have entered right here. And there's your 20 pips, right? Here's your 20 pips. And you can see you could have, this is a 57 pip move. Now, one thing about this one is this was outside the money zone. This was the overnight move. Now, it did come in and we did have a zone pretty much from where the day opened, and you had range until we got to London Open. Once it got into London Open, that's when it started this move right here. So this is really the area you may or may not would have wanted to take this during this session, this part of the session. This was still pretty early on in the middle of the night, but this is probably about 9-10 o'clock at night. And oftentimes these don't work. I actually took one last night in the session last night. And I guess it was similar situation. It was right at it was breaking through a zone. I thought I'd take it just to give an idea of what it's like trading in these time frames, and I got stopped out with it. Let's see what the gold looks like. Oh, and Eva, by the way, that drawdown I had on variable the other day did dig out of it.
Oh, did it? Good
Yep,
stuff.
it did. Came very
That was
close.
on gold, right?
Yeah.
How deep did you get?
I got 8 levels deep. I was, but it was right there around the 1950 area, and I was still pretty confident it was going to bounce off of that, and it did. And it got me out with profit.
Good
So,
stuff.
but it took some heat. It was a 13 or 14% drawdown.
Well, as long as it turned you around and it got you out.
Yeah, it was a little bit more drawdown than I was used to seeing with it, but it did. It wasn't out of the parameters.
Yeah.
I mean, 15% is still well within my risk tolerance. And it just let it go, and it did dig its way out of it. So that was comforting to see that.
Yeah. Actually, my variable has closed for the week.
Oh,
now.
did it? You got your profit target?
It it meet my profit target and it shut itself down.
Oh, good.
So I'm pretty happy about
You're
that.
on vacation for the rest of the week.
I guess I am. I guess I am. So it did really well. So it actually this has been my best week, and I wasn't even going to go live, to be honest with you, because of it being early in the year. I thought next week I would start live. Well, I went live this past, as you know, and it's the best week I've ever had since I've been
Oh.
demoing this since October.
Good.
Yeah.
That's great. That's great.
Yeah.
And yeah, my gearbox is doing doing pretty well too. Let me see if I can pull my gearbox up here. Let's see if I can figure out where to. Here's one of my variables. $74 drawdown with this is on a $6,000 account. This is a demo account. I'm just demoing this one. These are all the settings that the developer is using. And so far for the week, it's right now it's at $64 that it closed, and it's at a drawdown of $76, which is well within tolerance. And that's the thing is you have to expect you're always going to be in drawdown. You're pretty much always going to be in drawdown. The question is how much drawdown can you handle and how much drawdown are you willing to use? But it just keeps chugging away. It finds an area, starts taking trades. You'll get a little bit deep in the drawdown. That's where all your profit is. You can see even like with this one right now, I'm in drawdown with the here's the British New Zealand pair. So I'm in 1, 2, 3, 4, 5 levels of drawdown, but it's starting. This last one is now starting to become profitable. Once it snaps back, the first couple may be a little bit may get a little bit of a small loss on it, but it's basically what it's going to say is that when it gets to be a British New Zealand, when it reaches, that's my target $2. That's not right. Well, when this thing snaps back, they'll put some more money into the bank, and then they'll start looking for some new trades again. Now my gearbox, I'm in my gearbox, and this one is basically started with a $3,000 account. This is a live account, and I started that this Sunday. So right now I'm up about 3%, and my drawdown's only at $1 right now with 1, 2, 3 different pairs open. And this one has the least drawdown of everything. This one just keeps chugging along, just keeps taking trades, putting money in the bank. You see, these are all profitable trades that I closed out with. And so I'm real happy with just a very small, and I haven't seen anything. I think the highest drawdown I think I've seen on this was about $60 or $70 all week long. So that's the other one. So Gearbox, I run Gearbox, and I'm running the variable. I have a couple of variables on here that I'm looking at right now. I'm just, I'll go live with these probably maybe next week. I'll go live with this. And then of course the Trying to find the top of this thing. Where's my VPS? I lost my screen. I lost my targets here. Let me put it up on different screens so I can see where I'm at. Bear with me for a second. I lost my charts.
Okay.
There we go. Got this one back.
There you go.
These things just don't quite fit my monitors quite like I'd like to see them. It causes me a little bit of problems that way. But anyway, right now, that's about all I have to say for this right now. We can wait a few more minutes and see if we get an alert. And if we do, we'll take a look at it. If not, we'll just move on for tomorrow. If there's any other questions, comments, something else you'd like to take a look at, just type it in the chat and we'll see if we can address that for you. I guess my question to the folks in the room is how do you want to continue, as we're looking at these arrow charts, do you want to continue with the technical analysis that we've been doing over the last several months, or should we just keep it real simple with these alerts as they come in and just take them or not take them? Get a little bit of feedback.
I think we just keep it simple, my friend.
Well, the thing is, how do we fill up all the time that we have when we're waiting for alerts is my question.
Well, that's the that's the challenge. That's the challenge. Maybe
And I can only show the certain things with the platform so many times. I can only show the pip calculator chart so many times, and if we're just waiting, and we try and make this room interesting, we try and make it knowledgeable, but I need to get a little bit of feedback on what will work for the people that are coming into the room. Did you enjoy
I've got
the
a question.
I guess the question is, do you enjoy the technical analysis aspect that we've been doing, or is it more complicated than makes it too complicated?
Leslie says, personally, I will still be manual trading the Hawkeye strategy alongside testing Arrow.
Okay, so Leslie, if I understand that correctly, you're enjoying the technical analysis section that we've been doing? Have you been finding that to be helpful?
Actually, I've got a question, Al,
Okay.
while we're waiting for Leslie to respond. The candles on here are different colors. Like the red, there's two different colors of red, a light red, a dark red. The green is the same. What does that mean? Is it like, why are some of the candles a bright green when they close and other candles are not as bright?
You're talking like these are more of a dull green,
Yeah.
and
Yeah.
these are bright green, bright red.
Because I have heard it said by another trader that they would not trade if the candles are not the bright color. So I don't know what difference it makes really, as long as
I think I was told that you trade the bright colors, not the dull colors.
but
there's
an arrow on the dull color candle. So how does that all fit in?
That's an excellent question that I will ask the developer, unless Matt knows the answer to that.
I don't know the answer to that one, actually.
Hmm. The only thing I can see right now at a quick glance looking at this is that the candles that are not as bright appear to be going in the opposite direction. For
They're in
example,
drawdown.
what I'm saying is that the bright green candle is going in the upward trend, whereas the dull green candles are going in the downtrend, and the same goes for the red. It looks like the dull red candles tend to be going more in an upward direction than the bright red candles do.
I think what it may be, and don't quote me on this, but I think when you get, like, for instance, right here where my cursor is, you have the bright red, then went bright green, and then as soon as it went back down into a below the moving average, we'll call it, it went dull green, but it hasn't really confirmed that's in a downward direction.
But it's doing that all along though, where they're crossing over the line, but some are bright and some are not.
Yeah.
I don't know what the difference is, because like I said, this one trader stated that they would not take a trade on the dull colored candle. And I don't know what difference it makes
Yeah.
as long as it follows the rule of staying either above or below the moving average line.
Yeah.
I thought that the reason that they were a different shade was because you're in drawdown in the light, in those off color shade, when it's not that bright red or not that bright green.
And that could be too, because
Which
here's
is
where
kind of
the,
what I said, right?
but
Yeah,
here's
I
where
think
the
it's
this would be perplexing, because here's where you got the alert, and it's a dull
Yeah.
candle on the alert. Here's a bright
Mhm.
candle, but it came right into that zone, so that won't give you an alert, because this one probably didn't give you the alert because it closed in that zone, so you wouldn't want to be going long while it was in that zone. I don't. I'll ask Nathan about that and just see how he answers that question.
Yeah. And Leslie actually has answered. She said, I just feel that I want to have that to nurture and fall back on in case some of these other systems disappear at some point. So,
Okay.
I mean, I get that. And she said, yes, also that it's a skill she wants to develop long term.
Okay. All right.
So technical analysis is good, I guess.
Yeah.
But don't forget though, sometimes we get beginners that it confuses them.
Right. And I think the way we're looking at, I think what we're looking at doing with this room is that we will be having certain sessions, maybe a couple times during the week. We'll have sessions for beginners for at least maybe 15, 20 minutes of just the very basic beginning stuff, as we're waiting for some of these things to develop. And then when we get the alerts, we'll go to the alerts and take or not take the trades. And then we'll go into some more, and we'll try and find that happy balance between overwhelming the beginners and boring the people that have been with us for a while that want to keep on learning new skills. So we'll just have to figure out, we'll have to figure that one out, how we're going to do that.
Yeah.
And hopefully we can find a happy balance. Because I know we do have people that come in and they get overwhelmed right away. People that have been in here a while, I think they're getting something out of it. And obviously Leslie is one of our
long-term traders.
Long-term traders, and she's been with us and she's learning, and we really do appreciate that. But we don't want to be, we want to be giving value to the room. We don't be overwhelming people. We also want to be giving value. So.
Yeah, she says a mix sounds good to me.
Yeah. I know there's a lot of people that, especially if we're going to be looking at this program with MT4, there's a lot of people that aren't used to using MT4. There's a lot of things about MT4 that I've used it a lot in the past. I haven't used it a lot recently. I'll probably be able to go back into my archives of my thought process about how to do certain things. And we'll have to be spending a little bit more time, because that's where these alerts are. All these EAs that are produced by Auvoria Prime are all pretty much MT4 platform based. But if we're going to do technical trading, it's a very difficult platform to do a lot of analysis and technical trading on, just because it's just not as user friendly. So we'll try and find that balance, and just try and make it interesting for everybody.
Yeah, we should We should probably meet on it. And,
Yeah, so we'll see if, let's see if we get any more alerts in the next minute or two. And if so, we'll, when this candle closes, when the market's now coming open at 9:30, and if we get any alerts, we'll take a look at it. If not, we'll wrap this session up and come back again tomorrow. Tomorrow is going to be, keep in mind, tomorrow is non-payroll farm, first Friday of the, yeah, this should be non-payroll, non-farm payroll
non-farm
tomorrow.
payroll.
Non-farm payroll tomorrow.
We know what
I
you
believe.
meant.
I believe
You
that's
get it
tomorrow.
right after the second time.
Yeah.
No paying those cows.
Yeah, non-farm, non-farm payroll tomorrow, 8:30 tomorrow morning. So be aware that that's a high volatility announcement, and that's at 8:30 tomorrow morning. We'll be in here, and we'll see what happens. With that, I'm going to sign off. Hope everybody has a good day, and we will see everybody tomorrow.
See y'all
Yep.
tomorrow, guys.
Thanks for coming in the room, and and good luck with this. I think you'll really enjoy this program.
Yeah, Leslie, get it on the market close tomorrow or Saturday, and get yourself all ready to go for Sunday night.
Yep.
For your trial, if that's what your plan is. That's what I'll be doing as well.
Okay. All right. And we'll see everybody then. All right. Take care.
Bye-bye.
See you guys later. Bye-bye.